Alright everybody, today we are doing a video about how you can use gold and silver as an investment to build true wealth in your portfolio. Gold and silver, they're like any other commodities. You can trade them, except gold and silver have two very useful features that makes it different than any other commodity you can buy today. And the first is that you can hold it. It's small enough, it's light enough, it's everything you need that you can keep physical gold and silver at your home. You can't do this with crops or oil or anything like that. And the second is a very useful skill that we'll go over today, and that's the gold to silver ratio. What is the gold to silver ratio? Well, the name kind of says it. It's how many ounces of silver it takes to buy 1 ounce of gold. So we can see throughout the market. We'll go through a case study, by the way, here in a little bit, but I want to explain this gold to silver ratio. So let's take a look. We can see a historical average here starting probably about 1997 of how many ounces of silver it takes to buy 1 ounce of gold. We can see there's a low here in 2011. It was only about 35 ounces of silver to buy 1 ounce of gold. That's insane. And then we can see today we're at an all-time high. It takes somewhere about 110, right here, 110 ounces of silver to buy 1 ounce of gold. Might I say, if you're looking to trade, don't. There will be a much better day to do it. So we're going to go through a case study. We have in front of us as well the silver spot price of all time. We can see it starts back in 1970, but we're going to start in 2000, as well as the gold spot price, again starting back in 1970, but again we're going to start in 2000 and go from there. We can also see, by the way, that gold has taken a drastic up climb, slight detour, and now it's climbing back up again. But silver is the opposite. It did a drastic up climb in 2011 alongside gold, but since then it's gone down and stayed down, which means that it might be a fantastic time if you're looking to buy silver to buy it now. So let's take a look at our case study, figure out what would happen. I've done all the math already, so I have it here on a notepad. If you have any questions about it though, leave it in the comments below. But we'll go through in 2000, if you would have bought $1,000 worth of silver, what you would be at today if you timed the market nearly perfectly. Now, is this likely? No. But would you have timed it probably pretty close? Probably. And even if you're a little off, there's still a lot of money you can make trading gold and silver using the gold and silver ratio. So let's see. 2000 is where we're going to start, we said, right here. Gold was somewhere around $4.7 per ounce. So if you would have had $1,000, that means that you could have bought 210 ounces of silver. Perfect. So you have 210 ounces of silver. What do you do now? Well, we watch the gold and silver ratio. We can see here that in 2000, things weren't looking good for this. It was going up and up and up, which is what we don't want. There's a small tank, but we want better. So we waited all the way to 2007 with our silver. If we would have sold our silver where it was in 2007, that would have been a decent return alone, because silver was somewhere around $19 an ounce. But we can do better because we know the gold and silver ratio will always time us in a certain way that'll make gold grow in value. So, 2007, right here, we went ahead and we sold all 210 ounces, or we traded all 210 ounces for gold. The trading difference was about 45 ounces, so 45 ounces of silver gave us 1 ounce of gold, and that led us to owning about 4.5 ounces of gold. Well, now we have to time when we're going to sell the gold, so we wait for gold to go up in value. So, right up here, about 2011, gold was trading at an all-time high that has never been at again, and that's right here, $1,800 per ounce. So we sold our 4.5 ounces for $8,100. That's great. In just 10 years, we made 7,100 bucks. That's pretty phenomenal. But we can do better. So we go back and we start watching silver again. And we wait for silver to go down, down, down in value. So 2017, boom, it tanked. All the way down to about, or 2016, I'm sorry. We're in 2016 right here. Silver tanked all the way down to below $15 an ounce at one point. But we're going to call it an average. Say we, didn't time the market too great. We're a little off, something of the sort. And we end up buying it at $15.4 per ounce. That gives us 525 ounces of silver at that point. Once again, we now go back to our silver and gold ratio. And then in 2017, we can see from 2016 to 2017, it dropped again. So in just 1 year, we can now trace silver to gold at only 65 silver ounces for 1 ounce of gold, which gives us 8 ounces of gold. We're doing great. So let's go to today. Today in gold, silver is nearing an all-time high again. We're up to $1,700 an ounce, and it's climbing. That means our 8 ounces was worth $13,600. That's pretty phenomenal right there. That means in 20 years, off of $1,000, we made $12,600. But I think things are going to start looking good for silver again. We can see here, for some reason, silver has stopped following the price of gold. We can see here, since recent, gold has started ticking up in value, and it's been racing here recently, especially since everything in the world that we have going on has started. But silver has stayed pretty modest. If anything, it's fallen, which is insane. At one point, silver was under $14 an ounce. But again, if we bought that today, $13,600 worth of silver at, today's price, $15.4 per ounce, there would be 883 ounces of silver in the mail to you today. What will that do in the future? Imagine if we ever get back to a time where it's $50 per trade, or 50 ounces of silver to gold for trade. That would mean that you would have about 45 ounces of silver in your possession. That's insane. That's a lot of wealth, especially if silver or if gold is still near this $1,700 per ounce mark. That's some phenomenal returns. Now I know there's a lot of other aspects that I didn't truly go into depth on. There's always prices above spot. When you buy bars of silver, you don't get it at this lovely $15.4 per ounce. There's always fees on top of that, $2 or $3. There's also not timing the market right. And there's a lot of other aspects that go into this. But gold and silver is a strong long-term security asset that lots of people use to make sure that their portfolios always have something in them worth value. Companies can go under, dollars can crash, but gold and silver, they're a currency that's never gone away in the history of man, and will always stay there in the history of man. So it's always good to back up your portfolio, your wealth, with a little bit of precious metals. And being able to trade precious metals in a way that they also make a profit, that's pretty phenomenal. And I think it's something that everybody needs to look into. And it's something that everybody needs to really learn about, learn in depth on, actually do their research. This was done kind of hastily to just show you the profitability that can come off of this. Can you actually trade gold to silver at exactly this rate? Probably not. Just like when you buy silver and gold in bars, they add a fee onto it. Probably trading gold and silver leaves a bit of a fee as well, especially when they're at all-time lows like this, when it was at, 35 ounces of silver to 1 ounce of gold. But again, there's always money to be made if we learn how the market goes. And this is one of those things. Gold and silver is simply a security asset that people use for their portfolios. But if you can learn to grow wealth off of a security asset, why wouldn't you? That's my 10 cents. Let me know your thoughts below. Let me know if you're going to start trading gold and silver. And let me know if you already do it. Always remember to do your own research, learn your own skills, and follow your own advice, not necessarily those of us you find on the internet. Thanks for watching. Have a great day.